Awesome. We're going to go ahead and get started with Fynking Analytics from San Diego, California. I'll go ahead and hand it off to whoever's doing your elevator pitch. Good luck.
Good morning, all. My name is Russ, and I'm the CEO of Fynking Analytics. Way back in early 2020, my dad asked me if I could use my coding knowledge to help him filter through his list of growth stocks. While researching and working on our solution, Gary and I realized that my dad wasn't alone. We found 66% of Americans had zero idea when it came to picking their investments out. We took our early prototype of Coolest Projects 2020 and told visitors to go long on 3 biotech stocks in March: BioNTech, Moderna, and iBio, each of which tripled thanks to COVID. We won Best in Show and captured the interest of over 80% of visitors who knew that the cheap tools were garbage and the good tools cost thousands a year. With this traction, we researched the market and found that the size of the obtainable market was $19 billion. We've been working on this web app and its next generation algorithm for the better part of a year now, and we're happy to say that we're ready to raise seed. We're looking to raise $125,000 to take our prototype out to market, and we would love to stay in contact with you and tell you more about how we give our clients a complete picture of the market for just $9.99 a month.
Great, thank you. Let's go ahead and move on to the video.
Hello, judges. My name is Russ, and today we're proud to show you quite possibly the best investment opportunity of this decade, Fynking Analytics. As the Fin Kings of finance, we're reimagining and disrupting the asset management industry and would love if you heard us out.
So right now, investing in the stock market is way too difficult. Not only is good data ludicrously expensive, interpreting that data takes forever. Now, as 99.9% of people do not work at a hedge fund, they not only can't access the data, but also wouldn't even know what to make of it, even if they had full access. Now, this means that most retail investors will inevitably fail to beat the broader market, as they're just throwing darts blindly around instead of taking aim like they should. This problem is in fact so significant that even convicted stock froster Jordan Belfort acknowledged that this is an issue on his podcast. A few institutions and people are trying to solve this problem, but all of their solutions miss the mark for one way or another. The common solutions considered are mailing lists, mutual funds, human investment advisors, and hedge funds. These products are largely inflexible and tend to get expensive quickly. The best option right now for most people is a human investment advisor, but the 1% assets under management and the $100 to $400 per hour rates is still too expensive for most.
It's time to change that. We're the Fin Kings, a dream team of 5 Southern California young entrepreneurs who have a radical new idea. I'm the CEO and CTO, as I have the bulk of the programming knowledge, as I'm from Palomar College's computer science department. And I also have leadership experience through my experience as an international DECA competitor with my COO, Gary He. Gary lives, breathes, and sweats business development, making it to the international finals in entrepreneurship team decision-making with me. Additionally, he has deal-making and strategy experience to keep things flowing smoothly across channels and groups. Our CFO, Mike Pham, is another DECA international competitor who specializes in finance in addition to his investing prowess. He helped me write our scope algorithm based off of sound financial theory and is in charge of charting out our financial future. Our CMO is Abir Thor, who not only sold himself to us, but also brought us into TYE and was able to leverage our chapter's resources to get us mentorship from the best of the best in the city. Our newly added Director of Impact is Simran Bajwa, who with her years of experience leading nonprofits, spearheads their outreach strategy and ESG profile.
We were also proudly mentored by many local entrepreneurs, including Mr. Anders Norman, Dr. David Fogel, and Tom DeVreau. Mr. Norman is the head of public markets at San Diego's pension fund and has decades of trading knowledge as a professional. Dr. David Fogel is the founder of Evolutionary Programming and is currently ranked top 250 globally in this field. As an AI specialist, he's been invaluable in helping us design algorithms. Finally, our business strategy has been discussed and validated with esteemed consulting's Tom DeVreau. He has over 30 years of experience at the top of different businesses and has been a treasure chest of knowledge for us throughout TYE.
We've already told you about the problem we solve, but who exactly do we solve it for? After surveying over 1,500 users across the internet and talking to over 260 people at Coolest Projects 2020 in Anaheim, we have found that our target market is primarily younger people with disposable income. They tend to be less experienced in the market and lack the expertise to invest well on their own. We can cater to worldwide interest in American stocks as our payment processing accepts and calculates for international trade. How do we know that these customers want Fynking? We know Fynking is in the right place at the right time because of our customer validation. After talking to 263 individuals for about a minute, each regarding their investment habits and their impressions of Fynking, we found the following insights. First, 32% of investors would trust an algorithm on claims alone, but that number jumps to 74% when sufficient disclosures and transparency is used. Additionally, users like to feel as if they're in charge of their investments. When we showed our early prototype, we found that 80% of the people we talked to were at least moderately interested. This also matches a survey we conducted across social media.
And so now what you've been waiting for, our product itself. Fynking is an investment application that is designed using the latest technical advancements to deliver highly customizable, highly tailored investment tips that require just a fraction of the usual time commitment. We're the TurboTax, we're the QuickBook of stocks. Our dashboard provides 10 investment candidates weekly, each catered to the user's preferences through precise calibration quizzes. One of our alpha testers, for example, Derek Mueller, was familiar with biotech and was particularly interested in speculating in the sector, and so we told our algorithm that when he was taking his calibration quiz to determine what kind of stocks he would like. As a result, our algorithm then recommended stocks like biotech and Moderna based on the machine learning insights produced by our algorithm. By making our users tell us their preferences, we're able to adapt our custom algo to them and create a key competitive advantage. Additionally, our dashboard provides our users important data to aid in providing key data in a concise and easy to interpret format. These all operate under our low overhead, high margin software as a service business model, which provides access to our web application for a measly $10 a month. Our low barrier to entry and our high levels of value make our product a no-brainer for the average retail investor, especially as the alternatives often fail to deliver.
As we previously mentioned, right now, most people accurately believe that stock research is way too difficult. Now, on the left, we see what a seasoned retail investor would use. Now, this Google Sheet, which was actually our original backend in early 2020, not only is hard to read at a glance, but it lacks any means of prediction other than rudimentary formulas. Now, on the right, I'll give all of y'all just a second to guess what the hell that is. Ready? It's a Bloomberg terminal with information about the stock price of Tesla. Now, who got that right at a glance? Absolutely nobody. So as you guys can clearly see, the free tools and the expensive tools both suck at making clear, concise, and comprehensive interpretations of data. Thus, as one user on TikTok said, stocks are like astrology for guys right now. And now, onto user experience. You'll be quick to know that Fynking is much cleaner and quicker to use. In fact, the Fynking algorithm is designed for the American professional who just wants to look at their portfolio while they're sipping their morning coffee, not spend hours trying to piece together all the information they need only to become confused. We start the user off with their recommendations, which show them new positions to consider without having them read sketchy articles like stocks primed to go to the moon. When they click on the stock, they're taken to the researcher screen. Well, alternatively, they can just click the researcher tab and type in the company to look at. The researcher screen is basically an executive summary of the stock and its information, capturing sentiment, fundamentals, and even the company's balance sheets on record. This is all done in an easily digestible format so that researching a company takes no more than 10 minutes. Finally, the user can click the portfolio tab to analyze the portfolio's performance and see if there are any optimizations or low-hanging fruit to improve their outcomes even further.
We provide unparalleled value to our users through our revolutionary underlying technologies. Fynking offers better insights into the market at a fraction of the cost by using bleeding-edge algorithms and serverless web application technology to keep our overhead ridiculously low. Our quote from Google Cloud and our bills from partner Symfin show that for the first 100 users, our overhead is just 88 cents per user per month, and this number drops as we scale.
Now that we've told you about us and our product, let's specifically look into our marketing strategy. We are using an online-first marketing strategy, as our target customers spend a majority of their time on online platforms. We have developed a network of influencers at our fingertips, ranging from TikTok influencers with over 1 million followers to an Instagram finance influencer with over 200,000 highly targeted followers. These users serve as targets for our initial push. We will be building our own following through organic growth as well. By creating informational and humorous posts on a daily basis, we will be able to harness Instagram, Twitter, and TikTok algorithms in order to scale rapidly. Across all three platforms, we aim to have 100,000 followers at the end of our third year in the market. We also plan on a referrals program, as we understand that this market and industry is built based on trust, and according to research, 86% of customers hold their peers' recommendations in high regard.
In addition to solving a problem in an underserved market, we also have a $19 billion serviceable obtainable market. According to Deloitte, about $1.3 trillion were spent in investment management in the year 2020, of which about 15% were from the US and 1.5% are retail investors. As retail investors are also expected to grow about 21% this year, our company, Fynking, is in a market that is on fire and ready to explode.
So we already have a prototype in testing, and we're aiming for a soft launch in July of 2021. We're already testing with around 120 alpha users. We're progressively adding features to improve experience as time goes on. In the future, we want to either IPO or be acquired by a firm such as Two Sigma or Renaissance Technologies.
While we've spent all this time discussing our product, a product is worthless without the proper monetization. But according to our financials, they point to the fact that we're a prime investment candidate with extremely high growth potential. Assuming a $125,000 seed round, our financials suggest that we will be profitable within 6 months and within 3 years, attain a 88%, if not higher, gross margin, as we project this industry standard 30% monthly growth for the first year, which tapers around to about 10% by the end of the third year. Although our initial cost per user is about 88 cents per month, our model suggests that this cost will fall to about 30 cents per month as bulk quotas are reached. Despite the fact these projections may seem a bit far-fetched, these are actually based off of UBS's standard industry figures for SaaS and other independently gathered data. With our product, we're fully confident that we will be able to match, if not exceed, these expectations.
Thank you for taking the time out of your busy day to hear us out. We are happy to answer any questions regarding our plan to revolutionize consumer investing. Fynking seeks to use its AI and platform to drive consumers' investments into ethical, sustainable, and profitable ventures, and thus accelerate the magic behind the free market through individual investment.
Great job, team. Let's go ahead and get started with the live Q&A. Mr. Dunjol, would you be able to ask the first question, please?
Yes, good job, team. That was a very good presentation. And I saw that you guys did a lot of research, which is impressive. You spoke to users and did a lot of surveys, which is very important. So again, I think most of us have our trading account. So my big question to you is, we can get a free trading account, and I don't have to pay anybody for research, because that is the biggest USP for the trading platforms, where they give you a research and with the intent that you will eventually buy stock and they make money on the trades rather than the research. How do you tackle that in your business model?
So we actually are primed more as a research tool in the vein of Yahoo Finance Premium or like the Seeking Alpha. And of course, our biggest competitor, like features wise, is Bloomberg. But what we're trying to do is we're trying to make researching simpler, because I've personally used TD Ameritrade's Thinkorswim and Vanguard, and I've actually shown screenshots of that and then shown screenshots of our app to the people at Coolest Projects. And we showed how much simpler we are, and our big value proposition is the fact that you can be in and out of the app in 10 minutes. It's meant to be used while you're sipping on your morning coffee instead of spending 2 hours making a single trade. And so that's why we justify actually being a paid service. And then to address your point on how we plan on competing with free services, we intend, as we expand, to move down and have a free tier as well with less features. But the thing that's stopping us from taking care of that as our first product is the fact that we want to have profitability and the adequate resources in order to sustain that.
I hate to interrupt, but we have to move on to the next question. Mr. Bowie.
Sure, this is sort of a follow-up question. I'm not sure I agree that Bloomberg is a competitor at a $24,000 a year advice fee. You rightly pointed out that trust is a key issue here, and I don't understand how you get past how you accumulate trust when your competitors of a T. Rowe Price or JP Morgan Chase have a gazillion dollars each to spend on social media where you're going to try and get recognition. So if you could describe more how you gain trust to get a following.
So our trust-based strategy is actually based on organic content, and I think my co-founders Abhi and Gary would be able to talk to you more about that. But basically what we're trying to do is we're trying to offer good tips for free and establish our presence organically as well, so that people trust us based off of our platform. And actually we have that strong brand on social media. We don't need the incredibly high ad spend that, say, Bloomberg uses, when we can leverage influencers also, which already have that trust. And if we can kind of piggyback off their trust, we can have some of that rub off on us as well.
Great. Now we'll move on to Mr. Brumbutt.
Thanks. So maybe my question is then, I mean, you've got potential customers who've just two of them on the judge there, judging panel, who've asked questions. Maybe think about content being king. Instead of a subscription model, think about how you can become the Yahoo Finance and the Bloomberg by offering this freemium service. At the end of the day, if your content is generating people money, they'll keep coming back. So I guess it's a follow-up question that, in order to build that trust, have you thought about other strategies? Keep it short.
So we actually have looked at the freemium model, and our initial decision was to have that as our first expansion instead of our first product. And the reason for that is because servers are expensive, and the sheer compute required for building has caused us to have a lot of expenses that we want to cover as quickly as possible. Having that flat $10 a month is how we're going to initially pay that off.
Great. Now we'll move on to Ms. Ruparel for our last question. Thank you.
So I think it was a very good presentation. You waded into a very, very competitive space for sure. So that is something which is going to be sort of stalking you in some ways. And I think I have a follow-up question to what Peter mentioned. Trust is a major issue. Okay, and this is, we are dealing with finances. So while you may handle it in different ways, I think the proof of the pudding is that people really make money using your app. They have to be able to make returns on their investment. So how will you make sure that they are making, they do come back? Otherwise, they're not going to come back to you. So how are you going to ensure they make money on their investments? That's the need of the customer, right? The need of the customer is not to research. The need of the customer is to make money on their investments.
Yes, so actually that's why it's taken us so long to even reach the alpha testing stage. And that's why we're also spending a lot of time in alpha testing. And what we're doing is every single time we make a change or try something new with our algorithm, we go through 30 years of back testing in random intervals. What we do is we have 25% training, 75% testing split. And I think Michael can tell you a bit more about how the algorithm works and how it's customizable. But we are completely poised to be customizable and profitable.
Great.
No, I'm asking about how you make money. I'm asking about how your customers make money. That's the question.
Our customers are making money because our algorithm's optimized to deliver a high Sharpe ratio to them, which is the ratio of risk to reward.
I think Pari is calling us out.
Yeah, so we're quite over time now. I'll go ahead and give the judges 5 minutes to score. Thank you so much, Fynking Analytics. You guys can go ahead and drop off now.